And Anshul, hi, good afternoon, and thanks so much for your time today. First up, give us a general read-through of the market today and also what we've been seeing in the near term in the couple of weeks gone by. Because every time we try and come closer to this 24,800, 25,000 mark, we recede back. Today, for some reason, we're being able to hold on to those gains. Fundamentally, do you think the tide is turning? Confidence is once again coming back into the markets? Are there any early signs of that?
Hey, good morning. Pleasure to be speaking with you. Good afternoon. Sorry. Yes, you're right. It is a confusing situation in the markets where every time the markets start to rally, they get pulled back for one reason or the other. The recent issues are surrounding tariffs and also, as a result, FII selling. But if you look at the structure of the markets, it's quite evident that this market is taking cues from growth patterns. So segments of the market where growth is looking, consistent and there is high probability of growth, those segments have done actually quite well, even in a volatile market scenario. And this is somewhat like the Indian philosophy of Samudra Manthan or churning of the oceans, where on the one hand you have the bad guys pulling on their side, and on the other hand you have the good guys who want the markets to go up. And sometimes one side pulls harder than the other side, but by and large it is the good guys who are going to win, and this is a market which in the long term is going to actually do quite well. We are poised for, and if you speak with companies also on the ground, it's quite evident that these companies, their body language seems to suggest, and also their investment patterns, they seem to suggest that they are building their businesses for the next 3, 5, 10 years, and they see tremendous value in this market over that phase. In the short term, of course, there are issues, but it is in this market that if you build a good portfolio, strong businesses with long-term growth patterns, it's unlikely that you will go wrong.
That analogy, Anshul, coming just back to that, the churn that we're talking about is not only between the bulls and the bears right now, but also amid the sectors that we're seeing in the market. We also have Kunal Botra who's joined us in the studio. And Kunal, good afternoon. Before we come to you, just want to take a follow-up with Anshul. Anshul, in terms of the sector churn too that we've seen, right? Autos have been consistent, but IT has its on and off days. What is your take on the kind of churn that we're seeing? And where among sectors are you seeing some confidence or some stability right now?
See, as regards the IT sector, you have to see the growth versus valuation context. Now, many of these names still trade at somewhere close to 25 to 35 times price to earnings 1 year forward. Of course, there are some which, because of time correction, have come down, and also price correction, they've actually come down to between 20 and 25 times price to earnings. But by and large, this market is between 25 and 35 times. For growth, which is in the range of 0 to 5%. And much of that growth is dependent on what's going to happen in the US economy. If that economy goes into a recession, of course, there is downside to growth estimates. But if that market holds up and is resilient, some upsides in growth numbers may be evident going forward. In this sort of a balance, we would be on the sidelines for the moment because really this anemic growth doesn't inspire any confidence unless we see some patterns or some signals of growth picking up in this space. For these valuations, I don't think we would be buyers for absolute returns at this time. Of course, on the downside, they may protect you on the downside because these are somewhat defensive sectors. But not material upside is what we see here. On the other hand, just as an instance, over the last weekend, I was meeting some companies in Delhi, and I met a defense company, I met a renewable energy company, and the kind of market size that and the growth that their markets are seeing, it does look like that space is in for a very good time, at least for the next 3 to 5 years. And in some pockets, valuations are not really out of whack. Of course, in other pockets, valuations are very expensive, but there are pockets where you find reasonable opportunity. So I would say that defense, renewable energy, that is one space because of the growth pattern and the overall market size that one should consider looking at. Aside from that, banking, finance, capital goods, and manufacturing, of course, look quite interesting at the moment.